And Nigeria's year-on-year inflation for January stood at 12.6% compared to 10.3% in the previous month. Value of money market assets outstanding at the end of January 2012 declined by 0.1% to 5.5 billion naira. For more, Bismarck Rewane, CEO of Financial Derivative, joins us from Lagos. Hi, Bismarck.
Hi, how are you today?
Well, we've got that January 2012 report from the central bank. The highlights there for you.
Well, I think first and foremost we saw a decline in credit growth to the private sector. We saw a marginal increase in the monetary aggregates, and we also saw an increase in inflation. But what is interesting in January is the fact that that was the month in which we had almost a 10-day stoppage to work and activity. The report for January actually does not capture the true picture until when we start seeing the effect of that in February. But basically, the report shows that there was stability in terms of the monetary aggregates. There was stability in terms of the exchange rate, and actually there was an increase, less than expected increase in the rate of inflation.
Looking at inflation, the year-on-year inflation, there was headline inflation, 12.6% was the increase, which sounds high to those of us in South Africa, certainly, where we've been bumping around 6% for a long time. And then 10.3% the previous month. Are we looking at inflation, you say steady, but is it a steady creeping upwards?
No, the month of January, in which is when we saw a 50% increase in the price of refined petroleum products. And everybody expected that a 50% increase in the price of refined products, both for transportation, for moving of food, for moving of haulage and all of that, would translate into something like almost 15 or 17% rate of inflation. I think not all of the inflation has been factored in. There is a transition taking place, but a 12.6% from 10.3 is only less than 2% increase, which was quite comforting from a policymaker's perspective.
From the central bank's
point, in February we are likely to. Yeah. Yes, go ahead.
Sorry, from the central bank's perspective, managing the credit growth. You talk about a decline in credit growth and inflation slightly up, but not as much as expected. What is their policy with interest rates and credit growth?
No, you see, the policy was actually to cool. It was preemptive in November and December. The central bank was expecting an increase in the price of petroleum products. So they took some preemptive steps to slow down the rate of inflation. Now that has happened, the central bank is now looking at how to jumpstart the economy and get it back into a growth mode in terms of an expansionary and accommodative monetary policy. Or if not tightening, remaining neutral. That is where we are. The central bank the Monetary Policy Committee again met after this sometime in March, and decided to keep rates unchanged. We are looking forward to, in fact, it was last week Monday we were expecting the inflation figures for March. We expect to have that either today or next week. And when we see this, the trend will now be established as to whether inflation has started easing off or is actually beginning to pick up again. At that point, the Central Bank of Nigeria will decide whether to be accommodative, contractionary, or remain neutral.
Bismarck, you talk about the interest rates around about 12%, 10%, 13%, certainly, as I say, double our prevailing rate at the moment. And when you compare to developed countries like the US and in Europe, where interest rates have been almost zero for a while, interest from investors who want to get some return on their money simply by putting it in Nigeria.
Yes, the reality is that fixed income securities in Nigeria, the treasury bills are trading at about 15%. And the 5-year, 7-year, and 3-year bonds are trading somewhere in the range of 16, 17% in some cases. These rates are not to be taken in isolation. They have to be taken relative to the rate of inflation. If you have inflation rates at about 12%, and you have interest rates of 14 and 15%, you have a real rate of return of 2%. But the reality is that at those rates of interest, it's impossible to actually begin to borrow efficiently to finance expansion of plants or even working capital requirements. What do we see? We think that now that there's some stability in exchange rates and stability in inflation, we are going to begin to see those rates begin to trend downwards gradually, so that there's some kind of equilibrium struck between the long-term goal of maintaining inflation, at the same time encouraging a sustainable growth trajectory and the GDP, real growth of real GDP.
How important, Bismarck, is oil to the economy? We know it's very important, but exactly how? Because the government talked about, or the bank talked about, increased revenue by 11%. To just over 1 trillion naira in January this year. But a lot of that comes from oil, something like 80%. So it's a big economy, but is it also hostage to the oil price?
It is a hostage. The reality is that Nigeria's dependence on oil, rather than reducing, is actually increasing. Oil is responsible for about almost 30% of direct and indirect GDP, about maybe 18% of direct GDP, but in all about 30% of both direct and indirect. But oil is responsible for 75% of government revenues and 95% of export earnings. So oil is not just systemically relevant, it's dominant. We have an oil-dominant economy. And therefore, if you back out oil out of the equation, out of the macroeconomic identity equation, you'll find that the economy is really, really vulnerable to shocks.
Is it an economy that is doing enough to reduce its vulnerability to those shocks? We have a similar situation in South Africa. We've relied on commodities for so long. Some of them we still do. But in the end, you're going to have to go into things like tourism and manufacturing and services and other ways of generating GDP.
No, that is true. The reality is that the diversification of the economy away from oil dependence is a long-term goal. These are structural. And structural issues, as you know, take time to actually, one, to start, and two, to accomplish. But coming back to the January numbers of 1 trillion naira, in January was when we saw the Iran nuclear threat and the heightening, and then we saw the Bonny Light price go as high as $126, $127 a barrel. We saw actually about a 14% increase in the price of oil. Production remained the same, so revenues were sharply higher. Now, those are beginning to go slightly lower. We are now seeing Bonny Light at about 118, 117. And so the long-term, the medium-term prognosis is that we'll see oil Bonny Light come down, back down to about 107, 108. That could actually be a bit discomforting for the fiscal picture in the short run after being used to the robust numbers of 125, 126 over the past few months.